Key reversals, bullish, Facebook using a 10-minute time frame. Now this is a lovely little study and it illustrates key reversal bars in the correct context, an uptrend. And these are the perfect times or occasions that one can pull the trigger for a potential trade as we have momentum on our side. This is the best time to trade bullish key reversals. We can be more aggressive as we have the force of buying behind us, propelling the market higher. Clearly we can see we are in an uptrend, making higher highs and higher lows. And for this study, we're going to play this out differently. Last study we had no volume and we used price action. Here we use a little price action, but we're going to use only volume with no structure. Okay, it's good to use different tools. And here we go. What do we note coming into this chart? We have a clear trending environment. Firstly, we're making higher highs and lower lows, but the important thing here is that we have the correct volume characteristics. As we rally, volume increases. As we react, volume decreases. Again, as we rally, volume increases. As we react, volume decreases. And then from here we push up with sustained volume. And now this is a very important concept, okay, to understand. After a big move like this, demand is in control. We've broken this level of resistance with good increase in volume. Then the sellers try to react. They try to pull back and volume decreases. So this is the point. Right from here, this area here is where demand is now in full control. They showed their hands on this move, and then we get further confirmation from the lack of supply. Do you understand? So we get positivity from the move itself, and then we get another positive element by the lack of downside follow through from here. We're unable to pull back. So that's two cases of positivity. This is the turning point. So here onwards, when we rally, demand is in complete control. The market doesn't need to exert itself to push on higher. Ergo, we have sustained volume, which is actually healthy. Just to repeat that again, after a big move, demand has proved itself, followed by a weak pullback. And this here is the turning point. Right here, after the weak volume. So as we rally, we can do on sustained volume. Why? Because the buyers are in control now. They don't need to prove themselves. It's the sellers that need to prove themselves. And that's a very, very important way to think. Sustained volume is not negative. As we react from here, volume declines always very low, and we can't even really react. Look, kind of hold sideways. But as we do push higher, volume increases. Again, as we react, volume reduces, and then boom, break off to the upside with increasing volume. This is Facebook. This is one of the largest traded stocks in the world, and look how readable this volume is. It's truly amazing. And on days like this, when we can clearly read the volume characteristics like this, and we're in an uptrend, it gives us a license to be aggressive. And by doing so, we can trade these key reversals very comfortably, or at least be anyway. Let's go into these key reversals. So bar B is an excellent key reversal bar. Don't forget, we have to come down. So we're coming down, and we dip under to reverse and close firm. Now what's important about this, we close firm deep into the previous bar, and as we react, volume declines, and then as we dip under to reverse and close firm, we get a pop in volume. This is a very, very high odds trade. And what is this bar testing? It's just testing this little congestion area over here before markup, because you know we struggled here. This is 10 minutes, so that's 1 2 3 4 5 6 7 8 10, so near on an hour and a half that we've been trading sideways. And just before markup, they just push it down, no supply, bang, close firm, let's go higher. Okay, that's all that's doing. And the way that we react with no volume followed by a nice popping volume at B is a beautiful key reversal bar. Now this is different to our usual type of setup, but we are skilled in what we do and we can read the volume. This is fine tuning a certain tool within our trading tools, as if it were. Now A is, but not so clear. We do dip under. Look, we can see that we dip under to reverse and close firm, but we don't close deep into the previous bar. We don't have any popping volume, but we do dip down and we are testing this area over here. We can see that we're testing these bars. So it is a key reversal bar, but due to the context about where we are and what the bar achieves along with the volume, it isn't clear cut, ergo it would not be traded. Dipped under above, had a higher spike in volume, then yes, we could trade it, but we don't. Prints like A, we cannot trade, but it is a key reversal bar. Okay, look, we are coming down here. Even if we're coming down a little, this is still technically a key reversal. But this, beautiful. Dip under, close firm, spike in volume, reduced volume on the reaction, picture perfect. To wrap this chart up quickly, when we can read volume like this and we're in a trending environment, we're looking for excuses to go long. And A is a key reversal bar, clearly under, however different. Then, but we do doubt, look from the test, we push on higher with increasing volume. So it's successful, no question about that. But then B, we can take the trade. Okay, we need to be taking these trades because sometimes the market doesn't produce a spring. It doesn't produce a 2-bar bottom reversals. These are valid entry points. And key reversal bars in diagonal environments like this, the context is correct. Good. So this concludes our studies for bullish key reversals. On to the next subject.